Chapter 2: Introduction to General Insurance. Dealing with risk. What is categories of risk? 1 is personal risk. People own greatest asset, such as health or life. Property risk is incurred a financial loss when insured's property is lost or damaged by fire. Liability risk, injury caused to third party. When dealing with risk, several options are available. 1 is avoidance. All chances of elimination, the least effective. 2 is the reduction of risk. This is respected of the government for railways and self-insurance, which they find it less expensive. Control of risk, which is number 3. This is reducing the severity of losses, such as adding burglar and fire alarm, which is sometimes a failure. The other, uncontrolled by human nature, is the wind, hail, and lightning. 4 is transfer of risk, the most practical and popular because an insured decided or was unable to withstand the financial loss. So 2 things here you have to remember. 1 is avoidance. 2 is transfer of risk. Avoidance is less, and transfer of risk is the most practical. Okay. The chance of financial loss, classified as speculative or pure. What is speculative? Just remember gambling. You have possibility of either financial loss or gain. What is pure? There is no chance of financial gain. That's it. All you have to remember. What is indemnity? It's an insurance contract. Indemnity is a contract which is enforced by law and is a binding contract between 2 people. A contract is legally enforceable only with legal elements and present. Indemnity is the actual cost, no more, no less. So if you remember indemnity as an actual cost, no more, no less. What is insurance contract? Is a binding between 2 people. Elements of contracts is agreement, consideration, and legality of object, legal capacity, genuine intention. The things you have to remember is agreement, consideration, and legality of option. There will be legal capacity. What is an agreement? It's enforceable by law with an offer made and unconditional acceptance of the terms between the insured and the insurer. What is consideration? An exchange of something of value. For legality of object, it's for public good. What is legal capacity? This you have to remember, which will be on the test. It's only corporation and not DBA. Means legally you're enforced into a contract, which is recognized as competent. Genuine intention is only on honesty and trust. 3 essential elements of insurance contract. Very important to remember this. 1 is insurable interest. Insured lenders who are interested in insuring their insurance with insurer. So make sure you want to get your insurance. That's in your interest. It's insurable interest. So utmost good faith, which is completely honest. Indemnity is the actual amount, no more, no less. So those are your 3 essential elements. There will be much more. So status of contract were essential elements not present on the contract. If you have no insurable interest, you're not honest and trustworthy, and you don't focus on what you want from an insurance company, then it's void or voidable. Void means unable to support by law purpose for which it's intended, or no payments received within 60 days. If you don't make a payment in 60 days, it's automatically cancelled. Voidable, the wrongdoer, or if proved by wrong done by the insured, then the insurer can void the contract. So for example, if you didn't receive your insurance, your payments, you didn't pay your payments in 60 days, you don't receive them. And if you have misinformed the insurer that you had previous insurance and you didn't make payments, or is it overlapped, he can cancel. What is a binder? It's a very interesting question. A binder is between a broker and insurer. A broker has committed an insurer to a contract by oral or written of insurance on any risk. If you're buying a house and mortgage, the lawyer will ask you for a binder from the brokerage. Binder contract, oral, made in writing, oral, when you speak verbally, but it should be confirmed in writing immediately. This is a very dangerous business for any business practice. Written is bound by the risk contract in details with declaration page, means the contact page. Insured's name, address, time of contact, and the start date, and the amount of insurance. Binding a risk, sources of brokerage, authority, errors and omission. When an insured is binding an insurance with agency agreement, it will always provide you to the brokerage with an authority to bind the insurer for certain classes of risk and limits. If they fail to do that, becomes errors and omission. So if the broker exceeds the limit of binding authority and a loss occurs, the brokerage may find themselves in errors and omissions claims. There is a limited amount of authority granted to the brokerage or agent working for the insurer. Formula: did and should is the amount of insurance you got, amounts of insurance you should have got, multiplied by the amount of loss occurred, equals to what the insurer will pay. So make sure you get the correct amount of insurance. Changes to an existing insurance policy. This is very important to remember. There's no change can be made on the contract, and nor can be added to the contract without the authority of the insurer and endorsed by the insured. Endorsed means signed. Only the insurer can tell you this is what we can add and this is the signature required. No changes. So termination of the insurance contract. It expires on the expiry date automatically. Insurers can request the insured to cancel in writing or verbally, 5 days by hand or 15 days by registered mail. Rules are normally stated on the contract if no payments received within 60 days. So in 60 days, if you don't make payments, it's cancelled. Changes to insurance contract: add only or extend a contract. Endorsement again, signature in writing between both the insured and the insured. What's a rider? Rider is only adding a peril to the contract, means you're adding additional amount. A floater is like a cell phone, highly mobile for commercial properties or specific coverage such as fur. Separate policy. You can add additional policy with no change to the original. And that's usually when you're traveling outside. We'll read more in later chapters. End of chapter 2.